give cash-strapped company promoters a new lease of life, the Reserve Bank today issued some important clarifications on the sustainable structuring of stressed assets, or the S4A, and CNBC TV18 learns that according to the new rules, RBI has allowed banks to waive off higher interest charges on bad loans. Ritu Singh, who broke that story, is here with the details. Ritu, what more are you picking up? And this is something that has been on the annual, but what are the exact clarifications?
Some important clarifications issued by the Reserve Bank of India privately to banks on the scheme for sustainable structuring of stressed assets, especially after banks had raised concerns on problems they faced in implementation of S4A norms. And the most important of these clarifications is the waiver of penal interest rates. Remember, once an account becomes an NPA, the rate of interest charged in that account is higher than the normal rate of interest has been. And now RBI has given the relaxation to banks to choose whether or not to waive that penal fee, which was one of the key demands put forward by the banks. The other important change is that asset reconstruction companies can now participate in S4A proceedings if they are part of JLFs which have decided to invoke S4A. Any upfront infusion of cash by promoters can be counted in determining the level of debt. But remember, RBI has maintained that this sustainable level of debt will have to be determined before this infusion of fund by the promoters. And lastly, the RBI has also clarified that any projects that are currently under implementation cannot avail the benefit of S4A. So therefore, only projects that have commenced operations or are completed, only those can be brought under this scheme.
All right, Ritu, thanks for joining.